Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the micro bullish scenario where we are looking for a continuation to the upside in a bigger wave 3 after wave 1 and wave 2 are finished. In this scenario, wave 2 over here, the candles closed on the 0.786, which is a common target for a wave 2. But what I don't like is that price wicked into the 0.886. The 886 is a rare target for a wave 2, but a common target for a wave B or a wave X, which then increases the probabilities of this move to the upside to be part of a corrective structure for eventually more downside. Now the invalidation of this scenario is price going below this wave 2 at 25,350. If we look at the impulsive structure that we have more locally over here, then for an impulse, you could count it in a 1, 2, 3, 4, and then you want to see a wave 5 to the upside. Now, usually a wave 5 is quite similar in price and time compared to wave 1, but you can see that this wave 1 went up much quicker in a shorter amount of time than this still being part of a potential wave 5. A wave 5 can be extended if wave 1 and wave 3 are quite similar in price and time, so that is something we at least have to keep in mind because this wave 3 did not reach the 1.618 target, usually for a wave 3 at 27.1k. However, it is longer than the 1-to-1 of this wave 1, which is a minimum requirement for a wave 3 because a wave 3 is not allowed to be the shortest wave between a wave 1, 3 and a wave 5. So that is already good. If we are then looking for this to be a wave 4 over here, then this wave 4 retraced to the 0.5 Fibonacci taken from the low of 2 to the high of wave 3, which is a maximum target for a wave 4, and then you want to see a 3-wave structure which you can spot on the lower time frames. Now in this scenario, you don't want to see candles close below the 0.5 as that would seriously decrease the probabilities for this being an impulsive structure to the upside. One could potentially then think about a double 1-2 over here, but what you actually want to see in a double 1-2 is this second wave 1 and then a 1-2-1-2 continuation, that this second wave 1 is shorter in time and price than the first wave 1. But that is not the case because, as I've just shown, this second structure to the upside is longer in price than the first structure to the upside. So that's not really something that you like to see. We do at least have support below price that I like to mention, which is between 26k and 26.1k, and we are still ranging at my resistance area over here. Now, if we look at the volume of the impulse to the upside, then what is important to at least note is that the highest amount of volume in this move to the upside is at the high, which gives a little bit like wave C vibes, because inside a wave 3 to the upside, you want to count 5 waves and then a 1, 2, 3, 4, 5, where the same rules apply for an impulse, preferably the highest amount of volume in a wave 3, which would be the volume candles over here. But you can see that on the right side, we have some higher volume candles, which would indicate that this wave 5 to the upside has higher volume than the wave 3 to the upside, which is not really like what you want to see in an impulse. It's more rare and it fits better with a potential ABC profile, which of course is bearish in that particular case. Now, if we look at the micro bearish scenario, we are still looking for a move to the downside. So in this particular scenario, the invalidation is all the way up here at 28k, and we are looking for a 3-wave structure for then continuation to the downside in either a WXY or an ABC. The main difference is what happens in the final structure to the upside. So we know this wick hit the 886, increasing probabilities for a potential corrective structure. A wave Y is then a zigzag to the upside over here, and then a wave A, wave B, and a wave C, ending in the most common target area for a wave C, which is between the 1 and the 1.236, taken from the low to the high to the low over here, the high of A and the low of wave B, which also then ends inside the bigger target area for a wave Y, because the Y target area is between the 0.618 and the 1.236, taken from the low to the high of W to the low of wave X. So that could work out very nicely indeed. In an impulsive structure, which is a wave C, you want to see another leg to the upside. However, the same rules apply for an impulse. You don't want to see the 0.5 broken if you're thinking about a 1, 2, 3, 4 and a 5 yet to come. In this scenario, the wave C most common target area is between the 1 and the 1.236, which is between 27.1k and 27.5k, which is also above this high, which can be an interesting target to at least wick this high, reach the target area, but also potentially hit the monthly that we have over here for then a move to the downside. The monthly sitting at 27.2k in this particular scenario. So we're looking for either a 3-wave or a 5-wave before a move to the downside. And if we look at the move to the downside that we have at the moment over here, so the rejection in the wave C target area, or the wave C target area to finish this wave Y, and we go to the 5 minutes, then you can see that currently this structure to the downside looks very 3-wavy, as you can see. So instead of like an impulse to the downside, which you really actually want to see for a wave 5, if we start for look for much lower prices and we're looking for a wave 5 on the higher time frames, you want to see an impulsive structure, and this currently looks like a 3-wave structure on the 5 minute. Could increase probabilities for price to move to the upside. However, a 3-wave zigzag structure can also be the beginning of a potential diagonal wave 1 of a wave 5. So then you have a wave 1 over here, wave 2, eventually 3, 4, 5, where you're going to have a diagonal. So it's difficult to say what's going to happen on the micro time frames for now on the 5 minute, but at least it's important to note that this is very much a 3-wave structure, another 5-wave move to the downside, but we are at resistance and we know at least support to the downside over here. If we look at the CVD, we have both bullish and bearish CVD divergences. The bearish CVD divergences over here already played out as this low got taken, very nice indeed. And more locally, we have a mix of both. We have higher lows in price, lower low on CVD. Bullish CVD divergence, the target is this high, but we also have bearish CVD divergences. Now it has to be said that the bullish CVD divergences were visible first and therefore get priority. So over here on the AGGR chart, higher low in price, lower low on the CVD in blue, that is a bullish CVD divergence, and that one appeared first. Only once we got this bit of a move towards the upside did we see bearish CVD on yellow, and based on probabilities, because it's always probabilities, the probabilities are higher for the first divergence that appears to play out, which would be the more bullish one, where we call it played out if it takes the high over here. So this is an important target. It also then invalidates the bearish CVD divergence that we have with that high over here. But that means price needs to find the strength to move to the upside at least a little bit to take these highs over here. Now we also have news this week. We have news tomorrow. At least want to mention it once. At 4:05 p.m. Central East European time, a red flag. So we got some high impact news, might lead to volatility. And it is also day 2 of some sort of a symposium. No idea, but it is a red flag. Can cause volatility. So that is all that I want to know as a trader myself. I'm not a fundamental trader. I'm a technical trader myself. So if we then look at the probabilities of the different scenarios, then currently the probabilities are still higher for price to move to the downside as long as the invalidation is not being hit. Price over here hit the 886. Wave 3 is not as extended as we potentially wanted to see. A 112 doesn't look too nice. Of course, we are still ranging at resistance here as well, even though we still have resistance up here. So currently, as long as the invalidation isn't hit, probabilities are still higher for price to find another move towards the downside. However, more locally, well, you know, it's a bit of a mix with the CVD as well. We are at resistance, potentially taking this high once more, and even this high as well could be nice for both the wave Y as well as the wave A. However, this is the target area for a potential wave C. The volume in this move to the upside could indicate this was a wave C over here. So today I'm going to be curious and wait patiently to see what's going to happen over here. If we get some sort of a diagonal to the downside potentially for then a wave 1 to continuation to the downside, then we also have a nice range throughout the weekend. Or if we can get one more push to the upside in these 2 days before the weekend hits and then start ranging in the weekend. We have to wait patiently to see what happens. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.